Happy Monday, everybody. I hope you had a good weekend and are all ready for another market week. There's a lot to review and a lot to preview, so let's jump in. Today is August 21st, 2023, and this is your Monday market update. I feel like I say this a lot and something always comes up, but this week's going to be a bit quieter on the actual news front, but a lot of talk. For the earnings side, NVIDIA will be the big news. August 23rd, this coming Wednesday, after the close. As you probably know by now, these videos are not about any individual stock, and certainly we're not pinning hopes and dreams on a stock that's up about 200% this year. But recall that in May, NVIDIA announced earnings, and their forecast for themselves and AI in general took the analysts by surprise and pretty much ignited the May to July rally that we saw. There was a lot of FOMO, but at that time I mentioned that it felt a lot to me like the past two big market-moving ideas, metaverse and before that blockchain. With all three of these, we had seen big moves, all in the pile-on camp basically. On this one, any company that could have anything to do with artificial intelligence went up, and NVIDIA led the charge. Actually, NVIDIA lit the fuse. So what we'll need to watch for this Wednesday is to see what they say. There's no doubt that they are at the tip of the spear on AI. The question really is about valuation. Based on the move, and frankly, will anyone care? The market didn't care about valuation on Facebook when they pivoted to the metaverse until it did care, which it did. As the article in December 2022 from the Ringer.com title said, 2022 was the year of the metaverse until it wasn't. Well, we'll have to see what Wednesday brings. We did get a new street high target price of 800 on NVIDIA late last week. There'll be a lot more this week, but I'm sorry we went down that rabbit hole so early. Let's go back to the play-by-play. Last week, markets gapped lower as the trading week started on Monday. Latest reason, property market in China. This is again revisiting the underlying issues in China that will keep it from recovering the way that we have been pricing in the past year or so. Remember, China was zero COVID for much longer than the rest of the world, and the thought was that as they leave zero COVID and the lockdowns, they would see increased growth, a lot like what we saw when we opened the doors. And this was factored into the global growth estimates from the dollar to oil demand to copper and other commodities and just overall economic activity. This seems to be slow to come around, so this must be kept in mind. Treasury yields popped higher, but later in the day, they backed off a little bit and stocks took their cue. Tech led and the broad market followed. By the end of the day, the Dow was up just a hair, S&P up a bit over 0.5%, and the NASDAQ was up a little over 1%. Stocks gapped lower again on Tuesday and would have a rough day as the day went on, visiting one-month lows. Overnight and pre-market, there was eco data from China as well as the UK and Germany, Canada eco data, and the U.S. Empire State Manufacturing data. Add in a hot retail sales number from the U.S., all of this made the markets queasy, and down they went. Talk about stagflation, pushing out expectations of rate cuts. Yes, cuts. I made it clear that I am not seeing those for a while. News sources are even resorting now to quoting currency and inflation issues in Argentina just to have something to talk about. It's interesting for people like me, but not usually market moving. The Dow ended down 1%, S&P and NASDAQ down almost 1.25% each. There was no pressure release on Wednesday as stocks were still for sale. They did open pretty flat. There was some time in the green, good earnings from Target and TJX, but we also had hot eco data, rising yields. Check out the upcoming special short equity video short on equity risk premium and why the 10-year yield actually matters. That kept the lid on things until about 2 p.m. Eastern when the July Fed minutes were released. I mentioned that I thought there would be a slight whimper when that came out, and to a large degree, that was what happened. As usual, the media dissected it, but simply there was nothing new. The message seemed to be, reminder to all, there are many Fed members that think the fight on inflation is not complete. The minutes reflected this, and there were 2 Fed members, non-voting by the way, that favored leaving rates unchanged, but overall there's a lot of worry about inflation being sticky. Overall, the market's view is that the Fed is done and bring on the cuts. Fed fund rates are the highest they've been in 22 years. We'll see what's next. Inflation is still in the crosshairs for the day. The Dow was down 0.5%, the S&P down 0.75%, and the NASDAQ was down almost 1.25%. Take note that there is excess creeping back into the markets, in my opinion. In this case, a SPAC. Remember those, like the IPO? A Vietnamese EV maker, VinFast, came to market and was worth more than GM and Ford combined. And if that's not enough, 99% of the stock is still owned by the founder's wife. Spoiler alert, I'll lead with the end of the day info, but Thursday brought it to 3 straight days of losses in the equity markets. Details coming up. Stocks did open slightly higher, even with the 10-year yield at the highest level since October of 2022, and the U.S. dollar came back down a bit, though it's been moving higher, hitting the highest level since mid-June. Cisco earnings helped the tech stocks for a bit. By 10 a.m., the wires were all abuzz with news that Fitch was stirring things up again, and they were worried about banks, small for sure, and even some of the big banks. Stocks did come for sale pretty quickly and stayed in the red all day. There was no major news, but a lot of little drips of news, mostly not market-moving news. So objects in motion tend to stay in motion. Stocks bled lower with no catalyst to change the direction. The bond yields being up at recent highs is definitely getting some airtime as a major headwind. Overall, August is not a great month. Everyone's pulling out the historical charts and such, and the recent one that I saw was about August following 10% plus returns leading into August. Up over 10% heading into August, saw the S&P pull back an average of 0.69% in the month. This is from Bespoke Investment Group. Regardless, at the end of Thursday, the Dow was down 0.75%, S&P down 0.75%, and the NASDAQ down almost 1.25%. Stocks opened lower again on Friday to all kinds of news. First, what we already know, but when did that stop the algos from selling? But Powell will speak from Jackson Hole. He'll speak on Friday about 10 a.m. Eastern, so we'll have plenty of time to worry between now and then. The Fed will be in Jackson Hole and not having a regular meeting this month. They'll be there from Thursday to Saturday, so we'll have to see what that brings. There were fireworks there last year. Powell laid things out last year, warning that there would be, quote, some pain, close quote, ahead. Let's see what the sound bites are this year. Remember that excess stock that I told you about from Wednesday's action, VinFast, the Vietnamese EV maker, worth more than GM and Ford? Well, slowly coming back down to earth, down over 20% on Friday alone. EcoData was the head scratcher. Atlanta Fed estimates Q3 GDP at just under 6%. Most estimates are much lower than that. How is that for raising rates to slow the economy working out for the Fed? Not so well, but we'll have to see how that goes. By the end of the day, the Dow was up slightly. S&P and NASDAQ both down just a hair. Not much movement to report. For the week, the Dow was down 2.25%, S&P down 2%, and the NASDAQ was down 2.5%. Third straight week for the NASDAQ being down. First time that's happened since December. This week will be interesting. As I've mentioned, we'll get NVIDIA, and that will move markets. We will also ship the Federal Reserve off to their plush meeting setting in Jackson Hole later in the week. Last year, we got the fireworks, as I mentioned. I'm not so sure we'll even hear a whimper this year, but we'll have to see how it goes with Powell's speech on Friday. Before he heads off, we'll hear from Fed head Goolsbee, and from Jackson Hole, we'll hear from Harker, and as I mentioned, of course, Powell. EcoData will be all over the place, housing, PMI numbers on service and manufacturing, job numbers on Thursday as usual, and the University of Michigan survey on Friday. I'd like to think differently, but the Fed will take most, if not all, of the oxygen from the room. We are set for another burst of retail earnings, and just in case you missed it, NVIDIA earnings. That's enough to watch. Remember, short-term moves are just that, short-term. We're staying focused on the long-term and reaching your goals. That's what we're focused on. There are opportunities. All that depends on each of you. Please come back Friday for the updated planning video and check out the website for all kinds of resources. Please keep in touch and have a great week.